Happy Friday, ladies and gentlemen, and welcome back. It's your friendly neighborhood PM with your top 3 market points of the week. And it's been relatively choppy ever since earnings kicked off this week. So without further ado, let's just dive into your top 3 names that were kicking off the action this week. And number 3 is one you all know and love. It's Google reporting their earnings. Now, they did have very strong quarterly earnings. However, they raised CapEx guidance yet again, closer to $205 billion for this upcoming year, and it caused the stock to sell off. Now, once again, this is because investors are getting concerned on the raising CapEx and the spending at which management is doing it, citing concerns around fiscal discipline. And on top of that, this is also the first time Google has gone free cash flow negative since they went public. So investors are really wanting to see some return on that investment coming forth. At number 2, it's a name that's actually benefiting from all this AI spending. It's Intel reporting a blowout quarter, vastly exceeding analyst estimates for revenue growth in the prior quarter, as well as forward-looking guidance coming in very strong. Now, Intel is setting themselves up to be a very key beneficiary to all of this AI CapEx spending because in order to build out these data centers, you have the names of Google, Meta, Amazon continuing to build out these data centers, raising CapEx, and that flows directly into names like Intel, whose demand for their CPUs is surging well past what they can supply. So Intel having a great quarter, we're seeing them up today. And finally, number 1, it's Tesla. So Tesla actually got hammered on their stock price, down close to 15% yesterday after delivering relatively disappointing results. And on top of that, they are now getting set into the crosshairs that all the other hyperscalers are getting as they went ahead and raised their CapEx guidance for the rest of the year, closer to around $25 billion rather than the $200 that we're seeing from Google. But this is in order to build out expansion for their manufacturing capabilities, their humanoid Optimus robot that we have seen largely just demos of, in addition to Cybercab and other various longer-term projects. But you couple that with declining profitability for the automaker, and investors are starting to get concerned on how CEO Elon Musk is repositioning the company towards robotics and AI rather than focusing on the electric car. And right now, the market is not rewarding that. So Tesla was down very strong after hours after they reported yesterday. Now, that does it for your top 3 names this week. What are we checking out for next week? Well, next week's it's more earnings. We've got a whole slew of ones reporting for the overall market, and we will keep you updated on the biggest movers next week, so stay tuned for that. Now, that does it for this week's video. As always, if you have additional questions, please reach out to your financial advisor, and if you do not have one, please follow our link below, and we'll be happy to get you connected with one. But as always, please go out, enjoy your weekend, and we'll see you the same time next week. Thanks again.